Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, November the 11th, 2016. It is Remembrance Day, so let's just give a note and a quick moment of silence to those that have served our country and died in its service. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. We create multiple hypotheses to have a plan in place so that we can recognize what the market is doing and then pick one of our plans to execute upon. This is a subscription room, so if you'd like to check it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. We do everything live here in the go-to in the pre-market session, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, take a look at yesterday. Yesterday we were basically looking for as our key hypothesis, a rotation down into the upper distribution, and then somewhere between the VPOC and the LVN of the upper distribution, we were looking for initiative buyers to step in and then rotate us up and through and come up and take out this this naked VPOC, this naked VPOC, this naked close, and push through to possibly all-time new highs. Our secondary hypothesis was a failure to break into the range and then move up, and then somewhere up here find responsive sellers and then rotate us down. We got a little bit of both. It looked like we were in hypo 2 to start, and then we rotated down, still looking at hypo 2, and then the buyers came in and hypo 1 started playing, and we just didn't get a bigger move. At one point in time when we got above that 66 line again and we were holding, I was looking for the continuation and a neutral day. We did not get the neutral day. They came back down and fought that 66, and then finally, lost the edge at the 66 and rotated back down to the midpoint and the VWAP and basically went sideways into the close. Take a look at the news today. It is a banking holiday in Canada and U.S. We have FOMC Fisher speaking right now. Don't know where he's speaking or what he's talking about, and didn't get a chance to check. I was late to my desk today. And then 10 o'clock we've got University of Michigan consumer sentiment, inflation expectations, and then at 10:50 Canadian Bank of Canada Governor Pelose speaks. So not a lot of news, but because of the election and because of what's going on with the president-elect and the fact that there is a movement afoot to try to sway the electoral vote before they cast their vote on December the 19th, I expect this volatility to continue, especially with the uncertainty of what Trump is going to do and who's going to be his cabinet, et cetera, et cetera, et cetera. So just keep it tight. Remember, it is Friday. Don't put a lot of risk on the table. It's terrible to have a big losing day and go into the weekend with losses and having to think about that all weekend. It drains your emotional capital. So save your bullets for high opportunity and know where you're wrong quickly and concentrate today on executing well. Okay, so taking a look at the big picture, we are back inside of this longer term value area. I've got a microcomposite going from the breakout day here at the 0708 through to well, I didn't add yesterday, so I have to add yesterday into yesterday, and basically gives us a value area between 65.75 and 2050. There's two key distribution areas down here that are separated by this 43.50. This is our key line in the sand below. Our key line in the sand above is going to be that 66. That breaks us out of the value and above the key CLVN for more continuation to the upside. Had a bit of a doji day yesterday as they fought to stay with the breakout, and they couldn't hold it. Well, they did hold it. They fought both sides, but then overnight we failed off of that 66 and came down, hit a low overnight of 51.25. So we came back to this balance. Remember that the most traded price in this whole period of time is down here at 52.50, 52.75. Some people are using 53. Doesn't really matter. Just call it the 53 area. We have a little bit of an LVN right here at the CLVN at the 59 with a prominent CHVN at 60.75. I'd be looking and using that as your warning line, and of course then your key line in the sand below is down here at the 43.50, and then below that this area still has a lot of repair work to do, and that key area below here is the microcomposite that I'm running from the breakdown back into the balance on the 0909, and the VPOC for that is down at 33. So below 43, I'd be targeting 33 with the first area to get funded and scaled is at that 40, 50 area. So that covers the bigger picture. Going to the overnight, we've got inventory that is net short and basically very, very toothy profile. And this is going to be the shape of our profiles probably for some time to come, because of the fact that we've got this volatility, uncertainty, and got a lot of algorithms kicking in. And most importantly, we have OTF participation. You can see as soon as the Europe opened, we kind of just chopped around and fought to get back above that 66. They took it up in the Asia section, and then once Europe opened, they sold it off, and that made that big impulsive move down. And then we've worked our way back up, and we've come up to the bottom of this zipper right here and failed, so there's a possibility we'll get a continuation pattern to the downside. But it is the Globex. As we come into the RTH, we get different participants, and we could see a change in the context. Right now, our overnight high is up at 70.50. So just a point above the VPOC from yesterday. Our overnight low is 51.25. And our VPOC right now is 21.58. I doubt that's going to change, but it can change. Remember that when I do these sessions, there's still, when we finish them, there's still time to change and shift. Either the higher, the low, or the VPOC. We've got the VWAP, 24-hour VWAP, and the LVN. It's not a really defined LVN, but it kind of separates the upper distribution toothy to the lower distribution toothy, and I'm going to be looking at the 6150 area. When I transfer over to yesterday's chart, you can see that at 60.75 we had LVN there, so I'm going to be using that as a trade area, because above it I'm looking for us to come up to at least the 63 and hit that midpoint. And then above that, I'm looking at the 66 as the key line in the sand. You can also see that there's a little LVN there at 66 and a quarter. You got this little triple distribution zone, and these two LVNs, price rejection areas, define. And then the the first target below 60.50 is the overnight VPOC, but most of the VPOC yesterday was down here at the 57 and a quarter area, this HVN down here. So I'm going to be targeting the 57 below 57 and a quarter below that. We're basically trading on it right now. And then just below that, we've got the 55. There's the 55.75 one standard deviation of the VWAP, the value area low, and the IB low. I'm going to use that as a trade area as well. When I talk about trade areas, they are areas that I will look to find setups to execute against. They're also areas where I will scale in front of. So targets are areas where I will scale, and trade areas are areas that I'll scale, but I'll also either execute a trade there or possibly add on. Now, because we've got this little bit of a slush area here, I want to make sure I'm above 55.75 or below 54.75, so there's a 1 point range there. And then anything below that, I'm targeting the overnight low at 51 and a quarter, and then below that, we've got the overnight, yesterday's low at 47.75. Our daily ATR is expanding still. We are running a 20-period full session daily at 26.10. So off of the overnight high of 21.70.50, our daily downside ATR target is 44.50. And that's important because of the fact that I can get rid of this because I don't need it. All the information I need. That's our key line in the sand just below it at 43.50. So we've got the daily downside ATR, and then just below it we've got our key line in the sand. And below the 43, I'm going to be targeting that 40. I'm using 40.50. And then just below that, we've got a little bit of support at the 38. And then the 33 becomes our next big target below. Remember that the most traded price in this whole area is the 52.75. I'm going to mark it as 53 because that's where I'm going to be looking for if we get below that value area low. Oops. All right, and then working our way up above the 66, it should be 66 and a quarter. I'm actually, the range high is 66.75. So is it the range high or the range low? Range high from 2 days ago. And then above that, obviously, you're targeting the 69.50 naked VPOC and the naked close. And then above that, we've got the value area high. If we do get above the 66, I'd be looking for a 80% destination trade, the value area play up, and a complete move up through value from the overnight low up. And then above the 72, we've got the 74.75, former microcomposite VPOC, and then the range high. The daily upside ATR target off of the overnight low is 77 and a quarter, and then a breakout, and everything with this break is all going to be about coming up and finishing the repair work. We did a lot of repair work yesterday in this area. We've been watching this for weeks for when this would happen, and we did it on the open yesterday, and we still have the naked VPOC at 83.75, but more importantly, we've got the unadjusted all-time high, the 91.50 September all-time high, and then the adjusted high at 21.85 on the December contract. And I would expect if we break out today and we get above the 85, that we're going to go make new highs and come up somewhere up into testing the high 90s, if not the 2200s. So that's all my levels for the day. My main hypothesis is, we're still one time framing up on the daily, so I'm looking for the possibility of continuation, but I'm going to be watching this 43, 44 area. If we don't hold that, then I'll switch. So my hypothesis for the day is an open auction in range and in value, a move down into either the value area or into the lower distribution. We could come right down and test the overnight low, and I'm looking for responsive buyers to step down in this lower distribution area. Possibly right off of the VPOC, the microcomposite VPOC, or dip down a little bit and take out the low, and then rotation up and just grind our way up through into value and through up into the VPOC and overnight high, chop around in this area, push up, test the 78, and then get the breakout and push through to the 83, and that would actually expand our daily range target. I know that, but we have big ranges right now and a lot of volatility, and the risk is to the upside because of the fact that we're near all-time highs. So hypo 1, open auction, in range, in value, move down, find responsive buyers down in the lower distribution, fail to break below the range, or even just get a little false breakout, and then move up and just grind our way up, come up into the 69, 70 area, chop around here, push and chop, and then push, and go and make a new all-time high. Hypo 2 is an open auction in range and a push up, and then failure somewhere in the 70 to 72 area, or a failed breakout, and then have responsive sellers step in and rotate us down through value, chop around in the 56, 55 area, push through, and come down and close somewhere down as we fight this 43, 44 area. That's hypo 2. Hypo 3 is an open auction in range, and then basically stay in this range and get an inside day and chop between 78.50 and 47. Now we got a doji day yesterday. We could just pause and get stuck in this wick or get stuck in this wick and just continue the auction here as we fight the 66 level. So hypo 3 is open auction, wide opening range, and then just chop inside with maybe a false breakout on either side, but spending most of the day inside of the wicks of this doji day. Hypo 4 is an open auction in range and failure to get out of value, find responsive sellers, and then come down to the 44, fail the 44, and come right back down into this 33 area and close somewhere down between 33 and the 18, and basically come back and and take back the whole value area that we traded on this day right here 2 days ago when we went from value area low to value area high on the microcomposite. And then alternatively, on a hypo 4B, call it, or hypo 5, whatever you want, an open drive, a push up into the 70 area, chop up here, continuation up into 85, and then just a trend day up. We had a pause day looking for a continuation day and a push up into all-time highs and test of the 2200. So those are my hypos for the day. Remember, it's Friday. I don't know if we're going to get light volume. I think we're going to get a lot of the same of what we've been seeing, and I'd be looking at late afternoon drift. If we get one group in control, that will continue to move in one direction late in the afternoon. So again, pick your spots, wait, find, there's going to be a lot of rotation on the open. I'm expecting the market on open to give us some pretty large rotations. You look at yesterday and the size of the rotations that we had on the open. We had an 11-point rotation up, then we had an 18-point rotation, 18.5-point rotation, 4.5, and then another 11.5-point rotation. So these rotations are huge right now, as Trump would say. It's going to be huge, very bigly. All right, that is going to complete our pre-market session. We're currently trading above the Keltner center line. Remember that we had that zipper measured move. That was where was it measured from? Well, it did get violated, but we ended up taking and making the move anyway because the primary target was 59.50 with 57.25 as a secondary, but it did get violated, so it doesn't really matter. So we're currently above the Keltner center line at 57.75. Right, sitting on top of that overnight VPOC right now. Break below the Keltner, move down to test the lower Keltner, will take us down into the overnight low by the time we get there. But if we hold, the move up will take us up into the 64 and likely going to be 65 area. Our floor pivot is sitting right on overnight value area high at 60. I've got 65, and then our R2 is up at 82 and 97, and our S1 is the 50 area, and S2 is down at the 32. So lots going on. Expect a pretty rotational day, regardless of whether they pick a direction or not. As always, trade well, trade safe, and we'll catch you on the flip side.